Hey guys, thought I'd do another stock roundup of my base metal mining stocks. So this is sort of none of the gold and silver, none of the platinum group metals. This is sort of your iron ores and your aluminiums and coppers and that sort of thing. So I'm sort of a big believer that this is sort of an unloved sector, but it's going to be needed for years and years to come. So we've kind of got to accept it if we want to sort of go green. Going green is part of the reason I'm in a few of mine. So we're sort of wanting to decarbonise. That means an awful lot of solar, wind power, potentially nuclear, electric vehicles, and that sort of thing. And I thought this was just a nice sort of illustration on not all of the materials needed, but some of the sort of key base metals needed. So you sort of see copper is needing, basically everything. Aluminium used sort of a lot in solar, not so much in wind, but sort of largely everything else. Nickel is obviously the big electric vehicle material, also used in nuclear and sort of slightly in the other areas. And then zinc, a lot of people wouldn't realise, is used an awful lot in wind power, which is sort of getting built out a lot by sort of energy companies and sort of some of the oil companies like Shell and BP. So yeah, good to sort of have a few companies with a nice mix of some of these. So one that I've sort of not built up as much as I'd hoped that I would, sort of in the lower periods, is Glencore. So they sort of do largely copper. They're actually sort of somewhat unique in that they don't really do iron ore at all. Not in any sort of great quantity. So they are largely copper. Sort of 21 billion of their revenue comes from copper, 14 billion in zinc, and then sort of 2.8 billion in nickel. But expecting this to sort of change over time with the changing prices. You can see as well, sort of the profit is even more skewed in favour of copper, zinc, and sort of nickel side. Not really sort of going for it in price just yet, but yeah, as you can see, we're obviously from the previous graph, we're all going to need an awful lot of copper, so quite happy with that. Sort of last year they were predicting a surplus for this year, but sort of number of banks now are sort of predicting quite a severe deficit over sort of this year and next year, so sort of expecting new highs. But yeah, that does sort of, I mean, you'll notice in my stock video I'm now 70% up on Glencore, and it's sort of a lot of bullish sentiment being priced in to the stock. So you can sort of see at £5.30 share price, the sort of earnings this year have been rocketing up. So 3 months ago they were expecting 52 pence this year, and they're now expecting 94 pence this year. So it's been sort of rocketing up, and that's the main reason, I would imagine, for the rise in price. But next year they're expecting sort of quite a sharp fall off in some of these commodities. So we'll see whether that plays out. I'm kind of sort of gambling that maybe they're not, and these forward projections are going to get increased as well as we sort of the whole world pushes towards more of these green transformations. So yeah, that's kind of the thinking. I am sort of looking at possibly selling off ASOS. Still haven't yet, but I was sort of mentioned I might go into Hymax. Looking at one or two others, international paper possibly to sell off, and sort of maybe spread the whole lot between Hymax and the miners. So yeah, that's sort of kind of my thoughts on Glencore. Yeah, really nice sort of nice mix of copper, zinc, and nickel. As I say, sort of a lot of the miners are sort of quite heavy on iron ore, so it's nice to sort of have this different mix. So Rio Tinto is sort of one of the other sort of key positions. This is probably my largest base metals position, and yeah, it's not sort of ran away in the last year, but is sort of riding somewhat high as again on the higher iron ore price. So sort of again doesn't get quite so volatile, but 627 on earnings, and it's now up to 886 for this year, and again sort of predicting a fairly sharp drop off in commodity prices next year. So Rio Tinto is again sort of largely iron ore, but they also do aluminium, which is going to have a huge use in electric vehicles, as well as sort of solar, battery storage, and that sort of thing. But yeah, I quite like them for the electric vehicles as well. They do some copper. They're looking to sort of expand the copper, which is quite nice, just to sort of diversify a little bit away from iron ore. And they also do diamonds, which is interesting. Sort of, there's a lot of talk about synthetic diamonds sort of going forward, that diamonds may not be the sort of sought after commodity that they are. But yeah, again, you look at sort of the profit figures rather than the revenue figures, and it's even more skewed towards iron ore. So sort of look at the iron ore price, largely sort of tied to the iron ore price, sort of Rio Tinto, and some of the others that are very heavily in iron ore. But you look at the 5-year chart, people sort of say, it collapsed, but it was still above sort of pre-pandemic levels, and it's sort of coming up. And yeah, so we're now 50% above pre-pandemic levels, and doesn't appear to be sort of going down. It's partly going to depend on China, but they're sort of coming out of their lockdowns and expecting sort of a reasonable amount of building. So yeah, I think iron ore looks reasonably good, and should sort of support this sort of reasonable profit figures, and them able to sort of push more towards their other materials and other sort of developments, such as lithium. So they've made an acquisition of an Argentinian lithium project, which is quite good, looking to sort of diversify. They're pushing for one in Serbia, but that's been met with sort of a great deal of backlash, and that was sort of scrapped. That was, I think, $3 or $4 billion sort of project. But yeah, there's sort of rumours that it was maybe scrapped for political reasons, because there was an election coming up, and sort of once that's over, this may start to sort of rear its head again. Obviously, it would provide a large amount of jobs and sort of income for Serbia. So we'll see. But they've got the Argentina one, so not going to be piling in money from lithium just yet. That'll take a little while to get going, but nice to sort of add a diversification. So yeah, that is Rio Tinto, and my other one is Vale. So quite similar to Rio Tinto, really. Sort of fairly heavily in iron ore, but they also do nickel. So sort of as Glencore and Vale being two of the sort of largest nickel producers in the world. That's sort of a reasonable position to be in on the electric vehicle side. They have signed, it's understood, but maybe not confirmed, but they've signed a sort of fairly long-term deal with Tesla. So you could see that as maybe bad if they've locked in the prices now and the price is going to go up. But it's sort of confirmed money for the long term, so that should be good. And they've got sort of a copper side as well. Again, looking to sort of grow that over time and maybe diversify a little away from iron ore. As again, the sort of iron ore makes up a huge portion of the profit, sort of 26 billion in EBITDA versus sort of just 1.5 for nickel and copper each. So that's not the best, but yeah, it could change over time with prices. And a little bit of coal, which again sort of would be bringing in somewhat reasonable amount of money. A little bit of a loss in the last year, but I think they're looking to sort of discontinue that and probably sell that off. So yeah, that's Vale. So interesting interesting three miners. As I say, you can hold sort of precious metal miners. I would sort of keep those separate from these really, because they would be sort of negatively correlated really. Your gold would tend to sort of go up when sort of the economy isn't doing so well and people are a bit worried, and then sort of that would really cause the base metal miners to be sort of base metal commodities to be dropping. So yeah, I wouldn't sort of hold all of these and sort of treat them as one, or sort of base metal and precious metals. You really want to keep those separate. So just looking at some of the other metals, copper, as I say, being a large part of a few of these, is sort of trickling up on the 5 year. We're sort of well above sort of pre-pandemic levels, sort of 50%, 60% up, and sort of projecting to be in a deficit for the next year or two. So this should sort of up the proportion of sort of Vale's copper amount, and sort of Glencore obviously being largely copper. So that should help. And nickel, I've sort of mentioned a few times, has been in a very strange spot. So it was sort of steadily trickling up with the EV demand, and there was some sort of issues from what I gather with a short seller, which went rather wrong and sort of pushed this, I think, above $100,000 at one point, and they sort of shut the market, and it's not showing here, but I think it's sort of tenuously reopening, and obviously it's much higher than even sort of a month ago, or a couple of months ago rather. So yeah, we're sort of 50% up on 2 months ago if it's going to stay at these prices. So yeah, going forward in the next, obviously the results that have been shown for Vale and Glencore are sort of 2021 and before. So that was at sort of 20,000 and lower nickel. So next sort of few updates should be pretty good next quarter or two. So yeah, that's sort of an overview really on my base metal miners. As I say, this is sort of largely the reason for holding them. Sort of think even if we do get a recession or sort of a down period, then the green push is sort of still going to be happening either way. A lot of this is going to be government sort of infrastructure budgets, which wouldn't get slashed, and sort of, yeah, as I say, decarbonisation push, which wouldn't get sort of slashed in a recession. Obviously it's used in, all of these are used in sort of general building, which would take a little bit of a downturn, but yeah, I'm taking a little bit of a risk, sort of buying some of these at reasonably high prices. As I say, Glencore was sort of £3 odd, yeah, £3.50. So I didn't top it up then, but the same with Vale. I'm sort of looking at this at $12. Never really had the cash available, or didn't have the foresight to sort of sell some other positions and get in. But I'm not a believer in sort of punishing not doing something in the past by still not doing it now, even if it's a good buy. So yeah, I'm probably going to be taking a bit of a gamble and moving more into probably Vale and Glencore, just sort of up them closer towards my Rio Tinto position. So yeah, leave your thoughts in comments below, and let me know what you think of mining. See you soon.